So yeah, hope everyone is in the room. Once again, good day, ladies and gentlemen. Good morning to, I hope the two guys from the US are in this session. Um, we also have one more participant from Australia. Welcome, Wall Street Institute and Company. We are going global. We've been global. It's just that this group is new. I had a group that I started in 2016. I had to shut it down because of scams. Hence, in this one, I don't really open for you guys to what you call to comment on the main main page because people start scamming each other within the group. So hopefully that's going to change. I was saying before I started recording that this year I'm going to be pushing for 1 million US dollars in funding. So I'm gonna start from zero. Doesn't mean I don't have funds now, but I'm gonna start from zero. And anyone who wants to join me for this journey, you're more than welcome. So yeah, yesterday there was an inauguration of the 47th, who happened to be was it the 44th as well, or the 45th president of the United States of America, Donald Trump. Um, Markets moved as usual, and really, to be honest with you, Trump doesn't move the markets. I always say that. Economic news, do not move the markets, but it really influences the decision of market participants. That could be a retail trader or an investor. So we pay too much attention on the chart because we understand how price action work. Anywhere else in the world, UK pay growth accelerate. Very good news for the pound. I'm sure you saw GBP pushing higher. But coming into the US session, we are seeing some bearish movement. Yeah. German investors' morale falls more than expected. So this will be shown on the the DAX top 40 companies from Germany. Yes, futures point to gains at open, Trump-eyed. Yes. However, the way the equities futures market is set up, it tells me that we might see more weakness on the US dollar. Even though yesterday we saw some whipsaws, 100 pips up, 130 down, you know. Hence, I don't trade news. It's just madness. Mexican peso approaches record low on tariff threats. So the Mexican peso is expected to weaken. That is going to boost the US dollar versus the Mexican peso pair. So we might see a bullish move from that. European natural gas up on rising demand. Trump's moves, not just Trump's moves. It is still winter in Europe or in the northern hemisphere, so natural gas is mainly used for heating up houses, etc., etc. Taiwan export orders growth beast forecast. So this might be reflected on the Chinese one, Australian dollar, and New Zealand dollar. Forgive me about the background noise, ladies and gentlemen. I am not in my usual place, still doing a lot of traveling before I can settle down for the year. All right. So we're gonna start with the US dollar as always. Let's look at the dollar index. So last week we were eyeing a couple of levels. Let me search for this one. It's probably the one we were looking at. The futures. Right. There we go. So just a second. Wi-Fi is a bit slow. There we go. So let's see if, yep. So this is the analysis we had last week. You see, we're waiting for the markets to come down here. Otherwise, there was a level right around here. It's not happy with this level for reasons known to the community. This is fair value price. This is where um, business owners are happy transacting at, because you can move 1 billion euros to the US via cable via Euro USD, and price will be at the same level, so it won't affect the exchange much. So what we see here is we open with a gap down, low weakness on market. Let's look at it daily, even though it looks like a pin bar. Someone asked the other, looks like a doji. Sorry, someone asked last week. Is it still bullish if it looks like a pin bar? If it's in the high time frame, that is daily, weekly, or monthly time frame, then yes, it is bullish. Why? Because we're trading above the opening price. Opening price was down here. We opened here at 0.900625, and current trading price is 0.90981. So trading above the open means we're bullish. Let's check the weekly. Remember, from the higher time frame, daily, weekly, and monthly, we are looking for, or the most ideal situation there is for all three time frames to be telling you the same thing. Yeah. Right. We're bearish on a weekly, not an ideal situation, and bullish on a daily. So what do you do when you have time frames in disagreement? So follow the higher time frames. I always follow um the monthly time frame, as you can see. Very, very, very bullish. So possibly we can revisit the areas of 0.87500. However, there is something that is very close to current market price, something of more of the short term. So there's a position that I was looking for within this area. Question, why this area? Let's look at bullish candlesticks, because we're looking for buying opportunities. Um, this bullish candle compared this one. This one is slightly bigger. This is a pin bar, slightly bigger. Small, small. The biggest is this one. Hence, this is where the big buyer is involved. Just like here, there's a big buyer involved here, but this one is around fair value. So the most ideal one would be this one down here, right? So the size of the candlesticks tell a story. It's something that I preach in the Real Forex Trader Bootcamp, which is coming in February. So get your accounts funded and get ready for the Real Forex Trader Bootcamp. So um, I'll be honest with you, I was a bit skeptical about this position here. Um, I'm going down the time frames to find the area. Still, I'm a bit skeptical. I'm looking at this push here, right? Let's push up. And one very important thing that we always identify here at Wall Street Institute and company to make sure that we're trading in the right location or area, it is fair value price, right? Fair value price doesn't favor traders. It favors, let's say, business owners and stuff like that. So I'm also not confident in this in this buying position that could happen here. However, if it does, it looks like a very beautiful setup. Yep. If it does materialize, it looks like a very, very nice setup. So let's look at this. 1:6. I was saying I'm not confident on this setup because when you look at the dollar index, it is still undecided, still at fair value price as well. So for some people, this whole area is fair value price, but a quite significant area where the market was playing around is this one. So you must remember this, ladies and gentlemen, that the market is meant for this. The market is meant for this, for balance, right? So that every buyer can meet a seller. But what happens when the market is out of balance? How do you see when the market is out of balance? This big push, right? Big push up. This is an imbalance, and this is a balanced market, which we call fair value price, right? So we trade at areas of imbalance. So I'm not confident in this position for that reason. So let us look at something else. No, for sure, you guys would love to see gold. Not a lot of people look at gold. I trade it as well, but not so much of late. So we had this position from last week, and I'm still confident in this position. So yes, you would have to wait for gold to come down to this level. However, we also do have an area of supply here, right up there. So almost equal distance for it to come down to an ideal area, and almost equal distance for it to go up. So we kind of in decision mode. And then the question becomes, what do you do, Maxwell, when the market is like this? I don't trade. I can't risk my money. I can't risk my money, sorry, on opportunities that are not worth it. At the end of the day, like I said, my goal for this year it is to raise 1 million US dollars in prop firm funds and to have at least 15% of that in payouts before the end of 2025. You'll get an opportunity to see this because I'll be doing a documentary on YouTube. I'll be documenting the whole thing just to show you guys how possible it is, right? What else do we have to look at? Let's look at the euro against the Japanese yen. Once again, ladies and gentlemen, you will forgive me for the background noise. I mentioned earlier that I'm not in my usual office, just doing some traveling a bit before we can fully focus for the year 2025. Nonetheless, I had to host this session. Right. Let's look at Euro Japanese yen. Now, I picked this one honestly randomly because I just want to show you guys that we use the same way of analyzing different markets because supply and demand is the genesis of price action. It's the genesis of price. You cannot mention price and not have the supply and demand equation in there. Ask anyone who did economics. I was an engineering major at uni, but I did a lot of short courses on economics before I got into the market, right? So we're bearish on a monthly, bullish on a weekly, contradiction, right? Remember, the most ideal situation here is for us to have all three time frames telling us the same thing. At this point, we have a contradiction because the monthly time frame is bearish, the weekly time frame is bullish, and the daily time frame is excuse me, the daily time frame is bearish. So we go with the direction of the highest time frame, which is the monthly time frame, right? So since the monthly time frame is bearish, what does that mean? It means we need to be looking for selling opportunities only, right? Just simple logic. You want to sell, then the question becomes where? You want to sell at a higher price. And visually, you need to have the picture at the back of your head. How does it look like? It's an area of imbalance, not an area of consolidation. Remember, where there's consolidation, is fair value. We do not want to get involved in those areas. So once you've established direction, which is bearish based on the monthly time frame, not the strongest of signals, but a signal nonetheless. So once you've established direction on the monthly time frame or the higher time frames, so maybe let me mention it in steps so that someone can write it down if they need it. So first things first, when you go into a chart, this is more of a lesson. When you go into analyzing a chart, before you can try to see where support is, where resistance is, you must know at the back of your head what you're looking for in this market. Some people may call it a strategy. You're not looking specifically for a buy position or specifically for a sell position. The market is going to tell you that. So which means you go into the market with a neutral mindset. You shouldn't be biased at any point because it will be very hard for you to pivot. Should you be expecting a buying opportunity and when you get into the markets, you see selling opportunities. So it will be hard for you to take those selling opportunities because your bias or your mind is looking for buying opportunities. Very important. Be neutral. Let the market tell you where we're going. Trade what you see, not what you think. Yeah. So you must have that information at the back of your head. So first step, we go through the high time frames, which is daily, weekly, and monthly time frame. What are we looking for there? We're trying to establish direction because if we can trade in the right market direction, there's a high probability of us making money or if being in the right side of the market, right? So that's the first step. We're trying to establish direction. Second step, we're trying to answer a simple question um, that I would say that we got from. We're trying to answer a simple question that we got from the first step. First step was direction. So now that we got the direction that is bearish, the question that arises is, since the first step says we need to be selling, the question is where? You know at the back of your mind it's at a higher price. The where is answered by supply and demand, which is why we go through lower time frames to try to identify those areas of supply and demand. Once again, how does the area of supply and demand look like? It has imbalance. So you see those big engulfing candlesticks, they're giving you clues, right? Depending on the current direction of the market. Current direction of the market is bearish. So which means I'm going to look for bigger selling candlesticks or bearish candlesticks, right? So you look at this one, you look at this one, not so much big, and this one. Something here. Remember, I said simple trick. This is not gospel. Doesn't mean you have to follow this all the time. But what I normally do is I go 5 candles back, 1, 2, 3, 4, 5, and I look for the biggest that is in line with the higher time frame. In this case, it is this one right here. So which means when we step down to lower time frames, we know the location of the supply or demand area we need to be looking for. Yeah. I hope that makes sense. So that is step number 2. You are looking for the level. For me, we have this rally, base, drop. Rally, base, drop. Very nice area there. So stepping down to our time frame, you can see we have a level on top of another. So I normally combine these levels like that. So Euro JPY, this is what we are anticipating. There we go. And if you want us to do this in the SMC way, we can do that. We have a very nice breakout structure here. SMC, why don't I use it much? It has some limitations. Plus, I don't like looking at a lot of things. We have liquidity here. So SMC is smart money concepts, right? We have liquidity here that needs to be taken out. What else is missing? imbalance. Okay, so that's the SMC way of analyzing this. So yeah, we have a very nice looking selling opportunity coming on Euro JPY. Let's plan for the trade. This is step 3. Step 1, you establish direction to find where the market is going. That is going to tell you whether you need to be a buyer or a seller. Second step is to find the level, right? Now that you know whether to buy or sell, the question is where. It is answered by step number 2, and the last step is planning for the trade, right? Pay attention, ladies and gentlemen. So it's possible that this trade can go all the way down to 150, right? But what is the ideal area to place your target profit? It is the most recent low right here, and you do get a very nice risk reward ratio, ladies and gentlemen. Here is a 1:7, meaning if you're risking $10 on this trade, there's a potential return of $70. Okay, slow and steady wins the race. You are not going to be a millionaire overnight. I hope this makes sense. What else can we look at? Let's look at Euro AUD. So these are also setups that are in my my watch list. Okay. Oh, this is a perfect example of what I'm trying to teach you guys. Before we go to the high time frame, can somebody tell me what is this area? Pretty obvious. So I'm gonna have A and B. You guys are going to tell me, where am I supposed to look for a selling opportunity? Where am I supposed to be looking for a selling opportunity, and why? So we've got A and B. Where should we be looking for an opportunity to get into the market, and why? Fantastic, Kutala. This is fair value. Why is this fair value price? Because maybe sometimes I just jump through that. It is fair value price because this is where everyone is happy buying and selling. Remember when I said the market is meant for balance, it's meant for every buyer to find a seller. So this is what I mean. As you can see here, people were able to buy and sell at the same time. Hence, you see more trading activity, right? Over a longer period of time. Price was generally trading around the same price, which I would say the average is 0.65, or let me say 0.66. Okay, so we look for opportunities here where the market is out of balance. Okay, yes, we can't trade. Well, you will find people trading in this area. It is an area of very, very low probability. Let me show you. Just by a trade that could have happened recently, right? This could have been a supply. Look at that. Stop loss would have been hit. Let's look at another potential area that we could have bought from. We do not have a nice buying area, but more selling opportunities. Why did this area fail? This was a nice push down, fair value here. It failed because this is within fair value price. So you don't, the thing here is to eliminate risk as much as possible. When we're analyzing the market, it is part of risk management because we want to not get involved in trades that are not worth our money, right? So let me quickly rush to the monthly time frame. Seems like you guys understand this now. So monthly time frame, we are bearish on Euro AUD, the euro against the Aussie. Why are we bearish? Remember, we're bearish because here's the opening price of the current month candlestick and we're trading below, right? Sorry about that. Okay, let's check the weekly time frame. So bearish on a monthly. The weekly time frame is bullish. Contradiction. We do not like this. Um, However, we are going to follow the high time frame, right? High time frame is bearish. From here, things are very, very clear, ladies and gentlemen. Look at that. Imbalance. Fair value. This is a classical example. Imbalance, fair value. Avoid this area, look for this area, right? So come here. There's your area of supply that you need to sell from, right? And this right here is fair value. Avoid this area. Teach yourself to wait. Teach yourself to wait. You'll start seeing things change. One of the reasons I'm a big advocate for traders in our community to have a job or a secondary income. If you can, please do it. Don't listen to someone who would say, quit your job and focus on trading. Maybe once you've accumulated capital and savings that, let me say 12 months worth of savings, I'd say you can quit your job then because you have enough time. You've bought yourself time to be in the market. So once again, planning for this trade, which is the third step. So we can target all the way down here, which is where I believe this is going. But the best nearest is this one right here, previous low, or you can target this lows here. 1:6, it is good enough. Why would it be ideal to take profits here? Let us assume price goes to our area. We get activated into the trade. Market plays around, fair value, right? Drops further down, doesn't hit target profit, and then comes back to a potential area of supply here. So follow me. When we were at this point, probably we were at, we'll put this here. So this is an assumption. When we're at this point, we're at $500. Oh, yes. Let's say we're targeting this lows. Let's say we're targeting this lows. When we're at this point, we're at $500. But as soon as the market went back to this area, you are now at $17. So if you didn't take your profit down here, or maybe down here, you'd now be frustrated because your profits have went down. You should have taken profits. So it's very important to build your account slowly. Okay. So for me, 1:5. If I don't see a very clean area to take profits from, if I can get a 1:5, I'm more than happy. Okay. So do not aim for the fences. Build your account slowly. Build your account slowly. Imagine $70 a week. Imagine making $70 a week. That is about $280 per month. It's not much in a year, but if you'd continue at the same rate, that would be 3,360 by the end of the year. I'm pretty sure it can help you do a lot in your life, because if you convert it to local currency, that is 62,000 rand. That is a lot, right? Last pair. Maybe let's look at the US equities. I want to